Hi everyone and welcome to this channel. My name is Penny and in this video we are going to talk about the market sell-off that is going on today that we have been expecting since the weekend, and also go through the individual stock analysis of Nvidia, Tesla, Coinbase, MSTR, as well as Intel. This is the market as it stands right now, and it's still selling off, and the market is pricing in that there is no September cut. So that's what today's dip is all about. And we have gone through this actually on the weekend video because there was a risk indicator on Friday that is warning everyone to reduce your positions and or clear out of your positions. And we can see that this candlestick today is already below this candle right before this top formation. So as we said on the weekend video, we are expecting a deeper correction than this one because on the 1 hour chart, the prior correction was only a small bottom, whereas right now we are dealing with this much institutional buys on the inverse side. So SQQQ is the inverse of the QQQ. And we also said that Nvidia is weaker in this correction than Tesla. And what do you know? When you look at the day chart, the candlestick today is already dipping this top entirely, whereas Tesla is holding still from the prior candle on the day chart here. So Tesla is still a risk shelter, if you will, but it's not immune from this correction. Let's just put it that way. So if you look at the 3-minute chart, it's still dipping, but it's more resilient than the semiconductor sector. And when we are looking at Coinbase, we warn everyone on the weekend to clear out of your positions because there is this risk indicator on Friday, and we are already dipping below the trend line on the day chart now, and the same as MSTR. And MSTR is actually even weaker. So for those who want to make profit off of the coin stocks, I would say look at the inverse indices. And this is true for all of the major stocks right now because QQ is dipping. So if you want to make a profit in this kind of market environment, look at the inverse indices. And the same is true for the SQQ on the week chart because we are having a historic bottom for the SQQQ. So consider these inverse indices for your near future trades. And on the weekend, we said to watch for resistance for Intel on the week chart, and we are hitting that right now. And you can see on the smaller time frames that it's dipping as well. So Intel is having a short-term bounce, no doubt about it, but it's not immune from this correction, and you need to watch for your risks if you are playing this upright Intel stock right now. So the risk going forward, my suggestion is to look at the inverse indices like SQQ, SOXS, and even UVXY because you will want to shelter your upright investment profits And honestly, right now, I would clear out of your positions because of the historic bottom on the SQQQ, which is representative of all the major tech stocks that's holding up the market right now. And without this tech support, the whole market would be in danger, to say the least. So you would want to have some kind of hedge to shelter your risks, at least. And you want to take profit so that you're not losing out on all of the profit that you made in the past several months. That's what my advice would be. So that's all I wanted to share for today, and I hope you can take that to heart. And I'll see you next time.